Ever wonder why, right after you enter a trade, the trend suddenly reverses? It's not bad luck, it's bad timing. You entered late, you reacted to the move, not the setup. You acted on emotions, not information. You saw price rising, candles turning green, so you rush in, afraid you'd miss the move. This bad behavior is called FOMO, fear of missing out. It turns strategy into impulse, and impulse is the fastest way to lose your money. Disciplined traders don't chase candles. They time their entries. They wait for setups. They know the market moves in waves, never straight lines. What goes up must come down. They know pullbacks gives them the opportunity to get in early, never late. So the next time you feel the urge to click buy after a big move, pause. Step away if you must. Breathe. The market always retests. The goal isn't to catch the top. It's to enter the bottom. That's where buyers reside. Remember the golden rule. Buy low. Sell high. Institutions want you to abandon this core principle. They count on you trading emotionally, and once you do, they label you dumb money. Stop letting your emotions rob you blind. Learn to trade with discipline. Develop your mindset. Build patience. Once you do that, watch your losing trades convert into consistent profits. Thank you for watching. If you're visiting, feel free to browse through our playlist. For our subscribers, we'll see you in the next lesson.